All right, so what do you make of the futures being lower? Do you think this is the idea of tariff uncertainty? Is it the passing of the one big beautiful bill? What do you think's putting some pressure on the futures this morning?
Yeah, I think overall the markets are entering a so-called prove-it phase of the current stock market rally. Valuations are high, Fed is on hold, earnings are cooling. And if you think about all the overhangs, obviously there's tariff uncertainty. The news over the weekend on the tariffs, I do think this is going to create a lot of near-term volatility. Stocks have rallied to records, pricing in good news. Tariff levels could be higher for some countries, and cooperative countries could see tariff rates back to April 2nd levels. And what really worries me, Vietnam has a 20% base tariff and 40% for products traveling through the country. For example, if China is using it as a conduit. So a lot of countries are seeing this. Maybe the tariff rates are going to be a little bit higher than expected. And the most important point is that most companies today are really unaware of the impact on supply chains. And I'm watching second quarter earnings carefully, which begin late next week. And with all that said, though, for the long run, this is going to be so good, the tariff war for the U.S. We have the consumer base, which should help our trade war advantage. Tariff revenue should provide about $150 to $250 billion for pro-growth initiatives like the beautiful bill, for example. And tariff negotiations could result in fewer trade barriers. European value-added taxes are ridiculous right now, and these could see fewer trade barriers.
Let's not go too far into the macro issues. I want to go back to the market here in the U.S. So you mentioned earnings season coming up. We've seen a weaker dollar throughout the year. Shouldn't that be a good sign for earnings season coming up? Because right now, I think a lot of people would say, and this is kind of a cliche, that the market's priced to perfection. But if earnings come in better than expected, doesn't that give a catalyst for the markets to move higher?
I think the weaker dollar is good for exports, when we export goods outside the U.S. because our goods become cheaper. On the other hand, though, a weaker dollar tends to import inflation, especially as prices move higher. So it's going to be a mixed bag. If you look at second quarter earnings for second quarter should be up about 5%, and that's going to be the lowest since the fourth quarter of 2023. Earnings, we got to watch very, very carefully because remember, earnings drive stocks, and with this valuation of 22.5 times forward earnings, it's going to be a little bit choppy in the markets near term.
All right, it's going to be choppy in the markets near term. What sectors are you seeing opportunities in? Which ones would you stay away from? I would think with tariff uncertainty, perhaps you'd want to stay away from consumer discretionary, but I want to get your take.
Sure. My three favorite sectors, regardless of what's going on. First of all, technology. Focus on long-term secular trends. Artificial intelligence, quantum computing, cybersecurity. Tariffs will not affect the long-term secular trends as much as you would think. Also, technology tends to be pretty resilient during past economic downturns. Also, look at financials. Loan loss reserves are a little too high. We saw some better than expected economic data last week. Financials are seeing some really good tailwinds. Regulatory environment later this year, M&A activity, opening IPO, bond issuance. And then industrials. Industrials are beautiful right now. Infrastructure spending, especially with energy, supply chain reshoring, AI-related generated demand, and then NATO, for example, increasing defense spending from 2 to 5% GDP. The sectors we don't like, and we've been saying this for the entire year, energy really worries us. Even the news that you talked about earlier this weekend, the increased OPEC supply, that's not good for energy stocks.
Yeah, we are seeing oil slip. Very quickly, Gene, we got to get out of here. Just your take on Tesla. Biggest lagger on the S&P this morning on the idea that Elon Musk is going to get his toe back into the political world again. What's your view just simply on the stock? Not the whole macro picture, not the whole narrative.
Yeah, it's hard for me to cover individual companies, but I do think this is a big overhang on the company because now, you looked at that Tesla stock sold off earlier this year based on uncertainty about Elon Musk's role within the government. When he did back away, stock rallied. Same thing we're seeing right now, just this uncertainty. How much time will he devote away from the company in terms of a third political party? And our United States, our country, we are not set up for a third party system. It does not make sense.